Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Good to have you with us again here at AusBiz. Let's get across what we saw overnight. Global equity markets easing after initially pushing higher overnight as concerns about lofty valuations of tech companies returned to spook investors. Now, this comes in the wake of strong quarterly results from Nvidia, the world's most valuable company. On Wall Street, the tech and communication services sectors were the biggest losers, sending the NASDAQ sharply lower as investors pivoted back into cyclicals. Nvidia's fourth quarter results, which were released after Wednesday's closing bell, were better than expected by analysts, but the chipmaker's revenue growth is decelerating. Elsewhere in the tech sector, Broadcom fell along with most of the Mag 7 stocks, while some of them been down software stocks such as Atlassian and Salesforce, which reported quarterly revenue higher than estimates, rose. Payments and financial services group Block is restructuring its operations around AI tools and is cutting 40% of its global workforce. This after reporting a 17% increase in gross profit growth to $10.3 billion US. Elsewhere, enterprise AI software provider C3AI tumbled after it provided weaker than expected current quarter sales and announced it would slash a quarter of its global workforce. And shares in advertising tech firm Trade Desk slid following its disappointing revenue forecast. J.M. Schmucker shares surged on the packaged food company's solid quarterly profit and sales estimates, and Celsius jumped after the energy drink maker beat quarterly revenue estimates. And London Stock Exchange Group's shares surged in London after it announced a $4.1 billion buyback under pressure from activist investor Elliott Management, which recently built a stake in the data provider. Well, the United States and Iran say they have made significant progress in talks aimed at resolving a dispute over Iran's nuclear program amid a large-scale US military build-up in the Middle East. The senior Iranian official told Reuters that the two foes could reach a framework for a deal if Washington separated nuclear and non-nuclear issues. Well, in the US, the average rate on the 30-year fixed-rate mortgage has fallen below 6% for the first time in 3.5 years, but economists said it's unlikely to boost housing demand unless supply increased. Now, that drop followed a decline in the benchmark 10-year US Treasury yield after the US Supreme Court struck down President Trump's tariffs. US Treasury prices did edge higher overnight on the back of safe haven bids, the US 10-year yield falling to 4.01%, the 2-year at 3.44%. Australian 3-year government bond yields, they're down to 4.23%. The 10-year was at 4.68%. The US dollar index up around 1/3% on the day. The Aussie has fallen back to 71 US cents. Oil prices have settled lower as traders track developments in talks between the United States and Iran. Brent crude futures down to just below $71 a barrel. Gold is up slightly at $5,190 an ounce, and copper was down more than 0.5%. Iron ore rising around 0.5% to 102 US a ton, and Bitcoin has fallen back to around $67,500 US. Well, earlier I caught up with Dan Ives from Wedbush Securities to get across what he made of those Nvidia results and more broadly what we're seeing in the tech sector.
Look, the street essentially beat numbers by 500 to 700 basis points, and the guide for next quarter, 78 billion. I mean, that was 6 billion ahead of the street. Look, you put it all together, 650 billion of big tech capex. This multiplier, the one company that benefits more than any other in the world is Nvidia, and I think it throws the AI bubble thesis out the window, despite obviously a little more muted, subdued reaction to the stock today.
Well, indeed. I mean, we have seen that market reaction, certainly a bit of a sell-off today. But, I mean, you say that the company essentially gave tech investors everything they wanted. So what do you make of that market move?
Look, I think, Barbara, right now, it's almost an AI ghost trade that you're fighting, where good is bad, bad is worse. You've seen it across software and across broader tech. I think for Nvidia, look, they become a victim of their own success. I mean, this was beyond bull case in terms of what they came out with. But I believe over the coming days and weeks, Nvidia stock is up from here. And it's our view, I mean, as we go into next year, it's $6 trillion market cap will be achievable.
Do you see, though, perhaps its revenue growth decelerating from this point?
Look, the law of large numbers almost doesn't apply. I mean, 77% growth next quarter, that would basically be beyond peak from January 2025. So, this is just starting this next wave that you're seeing in terms of demand from a data center perspective. And then when it comes to just the chip build out, and it doesn't even include physical AI, which is less than 3% of revenues today.
Dan, you talk about that doomsday AI software narrative having gripped Wall Street in particular. What did we hear today from Jensen just in relation to his view, Nvidia's view on what's going on there?
Look, Jensen talked about what we've been talking about, I think many others, is that software is going to be the hearts and lungs of the use cases. The concept that an Anthropic Claude is going to unseat software companies, I think that's a fictional narrative. Jensen talked about that, but then also you look at Salesforce and Workday, those stocks, I think they started off down after market, they both came back, and I think you're now starting to see a software bottoming trade.
So, the point being, and you've underlined this too, that perhaps those agentic tools such as Claude and Anthropic will have to actually use the likes of Microsoft and ServiceNow.
Look, to me, it's the most disconnected trade that I've seen in tech in my career. The concept that software is going to be structurally broken through AI. I view AI as a huge catalyst for software, not a structural, negative for the sector, and that's how it's being treated. And I think that, as it continues to play out, I think that's the opportunity to own some of the winners.
So do you buy into that commentary we heard from Anthropic that the tools like they're releasing, they're not replacing that software, particularly the SaaS companies, it's complementing it?
Well, it is complementary, and I think if you look at ever since Anthropic held that event, the other day, the stocks have actually rebounded because I think the fear is more there than the reality. It all comes down to it's going to be data that's going to be the success of these software companies, the Salesforces, the ServiceNow, the Oracles, the Microsoft. Anthropic is not going to unseat them.
Yeah, speaking of Salesforce, of course, it reported quarterly revenue higher. Overall, what did you make of its results?
Look, it's a work in progress. I thought these were good results, in terms of as it played out. They clearly, from an AI monetization, pressure's on for Benioff, but almost, you're almost at $1 billion in terms of monetization so far. It's less than 2% of revenue. So I get the street putting it way in the penalty box, and I think Benioff and Salesforce underestimated it. But over the coming years, they will be a major beneficiary, and I think they've started to turn the corner, and I think that's what you saw this quarter.
So what's ahead then? What do investors need to consider at this point, Dan?
Look, I think there's a few things. Look, you're essentially fighting an AI ghost trade. You need OpenAI to get their funding round done. You need Apple to come out with their Siri AI. You need some of the software fear to kind of subside, and you need software names to go higher, because I don't think tech goes higher without software. It can't just be semis and hardware. And it's about monetization that you have to start to see. Because look, right now the bears are ruling the day. Kind of yelling fire in a crowded theater, but I think that's the opportunity to own the tech winners as this plays out.
Dan, also, looking at further implications, particularly in terms of job losses, we've just heard from Block that it's going to cut 40% of its workforce. Is this what we're seeing from that AI disruption?
But also, Block is not what I'd call, the A+ of companies. Look at the last year and a half there, right? So I'm just saying, it's very easy to kind of focus on companies like that and say AI is going to displace things. To some extent, AI is going to ultimately be a net job creator than a detractor over the course of the coming years. But the fear and the dystopian sort of views, and look, I think the industry is to blame for that as well, but I think it all needs to prove itself out. But again, I think software, engineering, innovation is going to be more than we've ever seen in this fourth industrial revolution.
And so given that sell-off we've seen, particularly in those software companies, Dan, are you seeing any compelling buys at the moment?
I mean, look, I think Salesforce, ServiceNow, I look like CrowdStrike, Palo Alto on the cybersecurity side as named list. Again, I think Palantir is way disconnected relative to the sell-off. And then you look at Microsoft. I mean, Microsoft, it's almost trading like AI is a headwind, where it's the exact opposite. And for that stock, call it, at 400 or a little below, we think that stock could be a $600 stock ultimately over the next 18, 24 months.
There's Dan Ives from Wedbush Securities in New York. Let's come back home then. Take a look at where we're likely to get going when the market opens in just a couple of minutes' time. So fairly flat, according to SPY Futures. When we're just coming to the end, of course, of reporting season, last official day, we do have the likes of Coles reporting. Also PEXA, Harvey Norman, Block, as I mentioned there, which slashing its workforce, Virgin Australia, TPG, among those companies that are reporting this morning. We'll get right across that and more in just a moment. Stay with us.